right, what's going on, everybody? For Cryptocurrent, I'm Stephen Miller, and you're watching Cryptocurrent Live, where we take you through some of the biggest news of the week, give you a little bit of an education along the way, and also tell you what to watch for in the next few days. I'm joined today by my co-host, Chris Corneros. Chris, how we doing?
Doing great. It's another beautiful day in crypto land, as you like to say, Steve. How you doing?
Oh man, it couldn't be better. I'm really, really excited about some of the news we're bringing today. We got a great show ahead for you guys. But again, if you're new here, do us a favor. Make sure you hit that subscribe button, press the like for us, and also make sure you ding that bell. Let us know what you're feeling in the comments. We want to make sure that you guys are getting the most up-to-date news from us, and at the same time that we're giving you plenty of the answers to the questions that you have so that you can be a little bit more educated on what's going on in crypto. So without much further ado, Chris, I think that we have a lot on our plate today, and I would really like to dive in, but I want to get one quick thought from you while I'm
Okay.
getting our setup here. What do you make of all of this news around Bitcoin in our country right now? Because Jamie Dimon just came out and made a couple really, really inflammatory comments, and then BlackRock actually turned around and their CEO basically gave him the what for. What do you make of all that, and can you tell our viewers a little bit about it?
Yeah. So Jamie Dimon, for those who don't know, is the CEO of, I believe, JP Morgan Chase. Very, very large bank slash investment platform slash just absolute monster in the financial space. But he came out and said that Bitcoin is worthless. Stay away from it. And honestly, I think the dude's just mad because Bitcoin has double the market cap that JP Morgan Chase does. And Lee Fink, the chairman and CEO of BlackRock, which for those who don't know is the largest hedge fund in the world, um, he came out and said, and I'm paraphrasing an article on Cointelegraph here that was very poorly written, but he basically came out and said, I like Bitcoin, but I know nothing about it. It could go to $80,000. It could go to zero. I don't know, but I don't think it's a bad thing. And that digital currencies are good and here to stay. So, largest hedge fund in the world, that's a pretty good vote of confidence, if you ask me, Steve.
Yeah, look, I'll take that vote of confidence all day long. The thing that I find funniest is like, and I tweeted about this earlier. So again, a little bit of a plug here. If you want to follow Chris and I on Twitter, you've got our handles right on screen right now. They are going to go away for the rest of the show, but you can follow us at Steve Miller _ PHX and at It's Mikas. Um, the thing that really got me about this is like you have this idea that Bitcoin in Jamie Dimon's eyes is worthless. Then why do every single one of your consumers want it? Why are we starting these funds internally that are going to effectively be Bitcoin funds, right? Like there's no sense. And the thing that frustrates me further is like then you have the Bitcoin maxi out there who's making the counter comment of, well, actually, Jamie Dimon and Chase are worthless. So again, if like you are taking one side or the other in this dialogue, if you will, online, do us a favor. Let us know what you think in the comments. I'm personally really curious what our audience has to say about this one. But this week, as you saw in our thumbnail, we're talking about the US crypto czar and figuring out whether or not he's a friend or a foe. But that'll be later on in the show in our aftershock segment. What we like to always start out with here, though, is our buy, sell, or hodl segment.
Buy, sell, or hodl.
And the first up this week, we've got this incredible little article about BlockFi credit cards. So, Chris, tell us a little bit about what's going on over at BlockFi and whether or not this truly is a rewards goldmine for their members.
Oh, yeah. I mean, this card is great. I mean, I first heard rumblings about it, God, back in April, I think, was when they announced, the initial rollout of it. You have to join a wait list. It was 200 plus thousand people long. I think finally it's opened up more widely. I think at least I'm eligible and can probably get it, so I should get on that. But, anyways, basically, this is your typical rewards credit card, except that it's not typical because instead of giving you points or cash back, you get Bitcoin. That's right. I think the first, that 3 month introductory period that most cards give you, you can get up to 3.5% back on all your purchases in Bitcoin in your BlockFi interest account. After those first 3 months, it's 1.5% return. And well, we'll get into those return rates in just a minute here, if you can bear with me. First and foremost, though, so BlockFi came out and said that if the people who are, the cardholders continue with their spending patterns through the first 3 months, then on average, cardholders, these BlockFi cardholders will spend $30,000 a year on their cards. Just to put that in perspective, because I know it probably sounds like a lot, it's actually a stupid amount of money, because the national average amount of money spent on rewards credit cards is about $5,000. So that is 6 times more than the national average. Pretty crazy, but makes sense. And to quantify how much in rewards have been paid out, so over about the last 3 months or so, BlockFi has paid out 124 total Bitcoin in rewards to cardholders. So if we go off a rough estimation here, that's oh god, math is not going to go well right now, but I believe that's about $6.5 million, Steve. Very, very rough estimation. I could be
It,
missing a zero.
it was only a matter of time before my dog interrupted one of our shows. So I'm just relieved that it was today, because I would be the one that would be howling over a segment like this, where we're starting to give you a little bit more info on something as incredible as the current rewards programs out there that are now rewarding customers in BTC. The thing that I want to go back to on this, which I think is really, really cool, is like, this is just one card. Nobody is going to talk about this out of this article. Like, what you see on screen right now is the headline. It's the fact that these returns that Chris is talking about are absolutely insane. You can't get this through any other provider. And I don't really care, what card provider you're going through. Like, I use Chase Freedom and Chase Sapphire, but I'm only getting what, like 1%. Like,
Yep.
that's absurd. If you want to actually be stacking sats, as we say here, there is no better play than getting into a BTC credit card. Now, there are many of them out there, and that's why I bring up this bigger story. If this is just what BlockFi is doing, think about the card that Gemini launched. Think about the card that Fold app is going to launch. But Fold app also has their debit card now too, and that's rewarding people for their Bitcoin spending habits. All of that is absolutely incredible, and we're going to see more and more rewards add up over time there. So I'm really stoked on this article. I think there's a lot of value to it, but do yourselves a favor, do some research on this, go find the card that's right for you, and see if it makes sense to add this to your wallet.
Yeah, it is. I would say probably the best and most simple card out there in terms of simplicity. It's easy. I mean, you don't even, all you need is a BlockFi account. You don't have to have any money in it, and you can start using it. So incredibly easy to use, fantastic rewards. But if you're interested in, that Amex Black Card equivalent in the crypto land, you got to go check out crypto.com's offerings, because their version of the Black Card may actually be almost as good as the literal Black Card. So check that out. But let's move on. Steve, what do you have for us next?
So I've got another one for you on the NFT side of things. And this one is kind of nuts. So, over here at cryptocurrently, we're big fans of the NFT space. We have had on this week alone the NFT archaeologist himself, Adam McBride, and we also have had on just yesterday Chris K from Bull Market Girlfriends. But where do you transact your NFTs? Like, where do you go to sell them? Currently, the only option on the market is OpenSea, right? And a lot of people have been really, really critical of OpenSea. You've got really high fees. You have a user interface that frankly sucks ass and really does fail quite frequently. But on top of that, it is still the only, you know, real material platform out there that users flock to. They did like, I think it was something to the tune of like $1.5 billion in August in terms of overall volume. And I mean, that's just nuts. But we had this big announcement come just about midweek, right after our Tuesday episode, or I may have been like during our Tuesday episode, that Coinbase is going to be launching their own NFT marketplace. And now this was just on the heels of FTX coming out and saying that they are actually launching their marketplace today. So right now, if you're an FTX user globally or an FTX.US user, you now have access to a brand new NFT marketplace. That's pretty cool on its own. But in one day, in a single day, Coinbase had 1 million users enrolled on their whitelist for this new NFT marketplace. That is absolutely insane. And I'll tell you why. Over on OpenSea, Chris, you want to take a guess at how many wallets are currently active over on OpenSea?
3 million.
Okay, 35,000.
Wait, there's no way that's possible.
100%.
How? I feel like there are way more people that have to be
So
using OpenSea.
the 35,000 number was attached to the number of their volume in August. I believe if I am going to give you an up-to-date number, I think that it was 60 as of like October 1st. But we're still talking about the tens of thousands. We are nowhere near hundreds. We're getting closer, but we now have like the mainstream retail investor showing direct interest because they want to go through Coinbase. They see it as safer. It's no secret that like you have to literally go through like 5 steps to be able to transact on OpenSea. You have to move your Ethereum from an exchange over to a MetaMask wallet, which you have already had to create. And then you have to sign specific permissions over to OpenSea for you to be able to transact. There's a lot of pluses and negatives with this, right? Like, I mean, to me, I'm all for an open market, but all three of these options are centralized. And that's where the next piece of this puzzle comes in. And I lose my mind on it, frankly. And it's the fact that OpenSea, who already has been in hot water in recent weeks with Nate Chastain's insanity of like insider trading on upcoming projects and the
Yeah.
like. But like last week, OpenSea actually has started delisting some of the projects on the platform, showing like really core centralization issues. Basically, the big project that got delisted is called DAO Turtles, and they are like 500 other projects right now that are rolling out their own fungible token in line with the project. So you basically could go stake your NFT and earn some type of passive yield in a specific token. So for example, in Dogs Unchained, who you guys are probably familiar with by now because we've had them on the channel a couple times, they have a token coming out called the Boom token, and you're going to be able to use that within their ecosystem. The Cyberkongs have Banana token, which currently sells on the open market for like $70. It's insane. Um, and even things like Cool Cats, they have the Milk token. Well, DAO Turtles had their own token. And the reason that OpenSea kicked them, they cited a violation of terms surrounding financialization. And what that means is because you are issuing an asset from your NFT that would technically make it a security, we cannot associate with you.
Hmm.
So, Chris, like there's a ton at play here, but what do you think is like the highlight of all this? There's so much to unpack.
I mean, quite frankly, I think the highlight is that Coinbase is getting into it because I, beyond simplicity, I just think Coinbase is also a safe option because it is a massive publicly traded company. And so, you know, let's just go back to what you were saying, right? About, that it was like the head of product, I think, for OpenSea is who was insider trading. That won't happen at Coinbase. And the sole reason it won't happen is that whoever does that can't, just resign or be fired, right? it becomes this massive, massive lawsuit that not only ends their career, but financially destroys whoever does it, right? It's a much safer platform that will hold not just themselves and its users accountable, but will also hold people who are publishing their NFTs accountable, right? Because it's no secret that, like, some of these shitcoins that we've talked about and that I'm sure you've read about in the news, there are NFTs that are essentially pump and dump schemes. And so the way that, it's all well and good to be a DeFi crusader, but at the end of the day, DeFi is inherently far more risky, right? But, at the end of the day, there are trade offs. I love it though, right? Coinbase does have its faults, right? A lot of complaints about customer service, but at the end of the day, its product is fantastic, super easy to use, and fast, right? You don't run into a lot of those same transaction issues you do with most crypto exchanges or DeFi plays, things like that.
So the one thing that I want to go back to in this, and it's kind of calling out to the buy seller hodl of it all. If I am in the market right now, I think that this adds a lot more value to getting the FTX token. Namely because like with this launch going so under the radar because OpenSea is dominating like the entire NFT marketplace dialogue right now in terms of the news coverage, that is going to add up for FTX over time. Like there's no question about that. So much so that right now the leading theory about Coinbase's NFT marketplace is that they're going to come in with a much more competitive rate, like basically to take people away from OpenSea and FTX. But at the same time, that could theoretically now be a new revenue channel for them so they can lower their actual trading fees on exchange.
Yeah.
That to me is extremely compelling because they need to keep their first mover edge in the US market in particular. They are expanding, right? Like, Coinbase has made it very public that they're launching exchanges in any country that will allow them to. But I think that the big message here is these are two players to watch because they are going to continue to encroach on OpenSea, and decentralized exchanges when they come, especially like, the one that's coming on Sushi like soon. Sushi announced that they're putting forward a decentralized marketplace for NFT trading. When that comes, that's where people will end up flocking to if they're willing to risk truly custodying their own assets. Rest assured, if you're going to go trade via Coinbase, they will be custodying your NFTs. Same thing over at FTX.
Yeah.
So again, trade with caution, do your own research. But to me, I'm buying FTX token on this type of news. But again, we are not financial advisors. I always say it, we are your crypto commentators and strictly speculators. Do your own research. None of this is financial advice. So, Chris, we have a very special segment that we like to go into about midway through these Friday shows. Are you excited for it?
Oh, I'm pumped because the coin we are talking about today, I have wanted to dive into in this segment in particular for quite some time now.
Two bulls, one coin.
And the coin today that your two bulls are bringing you is none other than Ethereum, also known as the original altcoin.
So, Chris, we are going to get a lot of shit for the fact that we are diving into two bulls, one coin this week on Ethereum. Because again, in two bulls, one coin, we are here basically to help our audience discern what projects are, legit versus which projects are shitcoins. And every single person out there will normally tell you that Ethereum's legit. But today we want to actually look at both sides of that coin and give you a really solid analysis as to where Ethereum is headed and where it currently is and some of the problems that are involved. So let's go ahead and just start with the basics here. Ethereum, as the world knows it, is an L1 Web 3.0 ecosystem. What that means is that it is the very first layer on the blockchain, basically creating a blockchain where people can develop dApps and even, start building DeFi platforms. There's not a lot more that we need to get into on this because we've covered, what Web 3.0 ecosystems are in the past, but that's a quick primer. Ethereum does have a leg up because, of course, it is the first mover in the space when we're talking about smart contract platforms, but it also has the current most active users of any blockchain. And upcoming for it, it does have a massive upgrade. So ETH 2.0, for those that don't know, is going to officially convert Ethereum from proof of work over to proof of stake, making it a much more green solution and at the same time making the platform far more efficient. That is expected in Q2 of 2022. Now, I don't believe that for a second. Chris, you've heard plenty as well. I've heard, more than my fair share about it, but dev timelines are rarely accurate. Do
Oh yeah.
you think that we're going to see this ETH 2.0 upgrade take place in Q2, or are we going to see it delayed?
If we see it a year from now, I would be surprised. And the reason I would be surprised is to the contrary of what you're saying. It's not that I've heard things about it, it's that I haven't heard enough about it. If it was realistically half a year away from us, all we would be hearing about right now is this upgrade, right? Think back to the Alonzo hard fork with Cardano. 6 months out, all anyone talked about with Cardano was that they had smart contracts coming and that they had this major upgrade coming. It got pushed back, but then, it was locked in, right? It was that end of August, beginning of September. That's all we heard about. This is about 6 months away, right? It's Q2, but the rumblings are that it's sometime March or April, so kind of early on still. That's 6 months out right now from where we are in the middle of October. And I kid you not, it took me a few minutes of going through, right, like doing my research to find any mention of it. And all the mentions I saw of it weren't even about the upgrade, but it was about an upgrade prior to the upgrade that will essentially make it possible. But even that doesn't have any actual date on it. So I would be shocked, Steve, to go back to your question. I'd be shocked if we saw it in Q2 of 2022.
Well, and it's really important that people understand, like, there's a reason we're bringing this to your attention, because that upgrade is what is going to be Ethereum's turning point, like, truly. If they do not nail the ETH 2.0 upgrade, and we're going to talk about this in a minute, some of the current Web3 competitors that they've amassed through the last cycle and cycle and a half even are going to be taking their market share from them. So we're going to get into that in a minute, but let's start with the big problem right now: scalability. At the moment, when you think of Web 3.0 blockchains, there are three things that matter: there's scalability, there is your security, and then the third one always escapes me. I believe it's not. Nope, it's not going to come to me. Anyway, security and scalability are the two big ones right now, and I want you to focus on that. When we're talking about scalability, the big thing is like the number of transactions that it can actually take on the network at a given moment. If you look at Solana, they basically have it built into their system that they can do, what is it? I think it's 30,000 transactions a second or something like that.
50,000, which,
Oh, ballpark.
had you watched my smart contracts video in the Crypto Basics with Chris K series on our YouTube channel, you would know that, Steve, because
Shameless
Solana
plug.
has the fastest transaction processing time out of any transaction service or institution in the world. Beats out all the credit card institutions as well, fun fact.
So the interesting thing there, and I want to make sure that I say this because, it's one thing to know one ecosystem, it's another thing to be like well versed in a lot of them. The interesting thing is that you actually always will end up seeing varying levels um, on these three main pillars of a Web3 ecosystem. And typically speaking, if you are going to increase the number of transactions that you can take at any one time, the likelihood is that you are going to end up sacrificing a degree of security. And we saw this earlier in the year when Solana had a big issue on their hands. So you can't necessarily have all three. We're working on it, but you can't right now have all three. So in this discussion about scalability, there also comes this argument of fees. Like, how much are we going to pay to settle these transactions? And on Ethereum, you do that by paying a gas fee, and that goes directly to the miners. And I can't believe that this is making this segment, but earlier this week, it was reported that a massive, massive Ethereum whale was trying to move a ton of ETH. Like, we're talking about hundreds of millions of dollars of Ethereum just between addresses. Like, they were moving it either on exchange or off exchange to a wallet or from a wallet, and the transaction failed. That failed transaction cost him $430,000 equivalent in Ethereum. If that doesn't spell a problem to you, Chris, like, I don't know what does. And that frustrates, like, anybody that transacts on Ethereum has to be just so annoyed by gas right now. And this is just kind of like the pinnacle moment of it. Like, this is unheard of to be spending this type of money on gas.
Oh yeah. I mean, I knew obviously that gas was an issue, but up until, the last basically 2 months, I really had only ever bought Ethereum as an investment, not to actually use it, which is what a lot of people actually own Ethereum for, isn't to invest and, hope it grows in the long term, which it probably will. But a lot of people that buy Ethereum are buying it to, either send money or interact with decentralized finance or buy NFTs, for example. So up until like August, I'd only ever bought Ethereum as an investment. I'm like, all right, I'll just let it sit. And then this NFT series came out called Decent Donuts. I know the artist, so I went to buy one. The one I was buying was like 150 US dollar equivalent. It took me 3 days to get that NFT because the gas fees were so ridiculous that all of my transactions kept failing. And at the end of it, I did get the NFT, but I ended up spending more on gas for failed transactions than I did on the actual NFT.
And see, that's
So,
all too common. And like what Chris is explaining right now, that is such a common problem that users have. Richard and I both go in on a lot of different NFT purchases, and earlier in this cycle, there was one whale that hijacked an NFT sale like on Mint, and we saw like a insane amount of gas spent on this transaction, but because it basically sold the thing out, we ended up like seeing something to the tune of like, I think it was like they counted something like 5,000 failed transactions.
Jesus.
And it's
That
just
was
because
was
in
that when
these
the
moments,
sevens? Was that when the
yeah, that,
sevens
yep,
launched?
that was the sevens. And in that moment, like, it spiked the gas up to like 1,000 Gwei. But since that moment, that was earlier on this cycle. Since that moment, I have even been on exchange and been watching the blockchain itself up on like platforms like txstreet.com to see that gas spiking up to 2,400 Gwei.
Jeez.
That is like, I don't know the exact number on it, but if I'm not mistaken, like, that's something to the tune of like 1 ETH in that ballpark. If you're talking about like 1,200 Gwei.
Yeah.
That, like, it's getting out of hand. So my question for you in this discussion of like whether or not ETH is becoming its own shitcoin nemesis of itself, will gas end up being Ethereum's downfall?
Oh, 100%. And not to skip ahead, to the next section we're going to cover, which is who are the most viable competitors. But for example, right, we were talking about transactions per second because although it's not a perfect metric, at the end of the day, for a transaction platform of any kind, this isn't just related to crypto. This is traditional, centralized, whatever as well, right? Like your credit card, your bank, Venmo, anything like that. Transactions per second, how much those platforms or apps or programs can process is a very, very good indicator of how well it's performing, right? Ethereum can perform only about 15 to 45 transactions per second, which is literally like 1/10,000th of the speed of Solana. And it also costs you a fortune to process one of those transactions, right? It's not like it would be a different story if you were spending a fortune, but these were literally instantaneous transactions. The issue with Ethereum right now, and the issue with Ethereum's gas fees and the crazy transaction times, is that you spend a fortune for a transaction that takes minutes. Even the worst performing websites, right? Like you go on like a StubHub or a Ticketmaster when everyone is trying to buy tickets to a festival, they can process things faster than that. And to me, right, that is just a huge red flag in that I think gas is Ethereum's biggest problem. I think really it's only problem, right? I think if you solve gas, it solves the transactions per second, but it's such a big problem that this one issue alone could actually kill it as a tool, right? It could still be a platform, it could still be that base layer, but as a tool, it starts to lose a lot of its attractiveness when you are spending the same amount of money on a transaction to just get the transaction to work.
Yeah, and that's the thing that honestly makes me sick about it. But there was something that you said that kind of brought me back to the three tiers of like what you need for a smart contract blockchain to function. So you already know security and scalability, but in my mind, I have this like weird habit of lumping together speed and scalability into the same exact kind of grouping. But the
Speed is
reality
the
is
third
it
one.
it is speed. Speed is the
Yeah.
third one. So let me make a quick differentiation and then I can get on to my point. When we are talking about scalability, we are mostly talking about the actual cost of gas and the number of transactions that are like within a specific ecosystem. The speed has to do with the transactions per second, the responsiveness of the blockchain. The security, that should be implied. So let me get to the bigger point here, and that is that the gas cost is a scalability issue. It is not a speed issue. There is a speed issue. They're addressing the speed issue in ETH 2.0. They're supposed to be addressing a different part of the gas problem in 2.0. However, I don't think that the EIP, which means Ethereum Improvement Proposal, that would drop the gas actually got approved. And again, like the miners wouldn't want that, but here's my issue with it and why I happen to agree with you, Chris. The entire gas dilemma over on Ethereum has made it a platform that is exclusive for the wealthy. And that's not even like remotely in line with the initial purpose of blockchain technology and the promise of decentralization, right? Decentralization is meant to create more of an equal playing field. This does the exact opposite. So, in this specific instance, the rich are getting richer, right? But in reality, that's not to say that there are not opportunities to generate life changing wealth on Ethereum. There are, but you have to be willing to be really in tune with how the market is moving at any given moment to be able to use that network. And that's still not how this thing should work. So you already spoke to the fact that you have your own video out right now on smart contracts, but let's get into these viable competitors because there are a few out there that are contesting. Now, part of this that I really want to get into first is eliminating a couple. So let me go ahead and put the two on the table that I think need to be eliminated. And let me tell you why. And I want to know if you agree or you disagree. The two that I think immediately need to be eliminated as viable competitors are Cosmos and Polkadot. Here's my rationale. When I think about what they are doing, they are more so creating a layer zero solution to allow for interoperability. They're not necessarily being purpose built to have dApps being built on top of them. they are allowing for different blockchains to interface with a layer 0 solution that allows these different blockchains to communicate. Like if you were trying to get Ethereum to communicate with Cosmos or Ethereum to communicate with Cardano, you could go through one of these interoperability layers. So that is my big reason for why I'm not sure I can call either of those a viable competitor at this point. If we're just looking at what this blockchain is meant for, would you agree or would you disagree with that?
100% agree. And one thing, great explanation. I'm going to simplify it for everyone in case you're not very familiar with, different layers and kind of cross-chain connection, those terms. Essentially what Cosmos and Polkadot, what Steve was just explaining, essentially what they're trying to do is rather than, develop something like an Ethereum, so think of it as like a Microsoft, right? It's a software that you can build things on top of, right? What they're trying to do is build below that. They're trying to build the framework for how that software can talk to other software that in theory does the same thing, even though it's built differently. So, for example, if you use Microsoft Word, it saves as like a .doc file. Originally, Apple computers, I don't think, could open those, but they created the .docx extension, and it let you write something up on Windows and send it over to a Mac where you could open and edit it. And that's essentially what Cosmos and Polkadot are trying to do.
And here's where I start to like get into this little bit of conflict with myself, because that is talking about layer 0 solutions. In this whole discussion, like part of the scalability factor of Ethereum, where we start seeing potential solutions to the scalability issue, happens at what's called layer 2. So in the second layer of Ethereum, that's typically where different decentralized applications are built. In the case of layer 2 scaling solutions, you have projects come in like Polygon Matic, Phantom, Immutable X. They're really compelling solutions to the scalability issue that we're currently faced with. In my world, I need to know, as a like, take it back to like the beginner. If we're ruling out Polkadot and we're ruling out Cosmos, does that mean we end up ruling out layer 2 solutions as well?
I would say if it's built on top of Ethereum, then yes,
I was gonna say,
because
because it's unique
you,
in its own right, though. Like it's operating as its own chain.
I would say it operates on its own chain, but at the end of the day, if you take away Ethereum, none of those platforms work, right? And that's why I think you have to remove them. What I what I think we're looking for here, right, in terms of what a true competitor is, before we talk about whether they're viable or not to compete with Ethereum, is if you get rid of Ethereum, does anything change with the fundamental way it operates, right? So if you have a decentralized app built on top of Ethereum, you get rid of Ethereum, there is no app,
Yep.
right? It's like deleting Microsoft. Word doesn't exist because there's no platform it's built on. A competitor, though, is like Pages in Apple, right? You can get rid of Microsoft. It doesn't change the fact Pages is there and still works because it's built on Apple, or it's Apple in itself, right?
Yeah, so that's where I start to get, really into the weeds, because there's a lot of value to some of those layer 2s. Like, let me be very clear. I love what Immutable X is doing. I love what Phantom is doing. I love what Polygon is bringing to the market, but they would not exist without Ethereum. That's the problem. So let's get into what actually makes a true competitor then. I have two that immediately come to mind. I imagine that you can probably think of, actually, I have three. I imagine you'll probably be able to think of at least two more. The three that come to mind for me are Avalanche, which trades under AVAX, Terra, which trades under LUNA, Terra Luna, and the third, of course, is Cardano, ADA. They're all independent layer one blockchains, and they are basically the foundation of their own ecosystems. So, would you agree that those three in particular are viable competitors? And then, who else do you think is in this conversation?
Absolutely. And I think the if Ethereum right now is the heavyweight champion, then that title contender is Solana. right? Solana's a no-brainer. That's your top contender. I would say I could be wrong on this, but I'm pretty sure that Tezos is similar. Although I think
Honestly,
they're
I
going.
was just gonna let you have that one. That was namely why I left it out.
I know you did. But I would say they're going in a little bit of a different route. So I wouldn't consider them because I also don't think Tezos wants to compete with Ethereum. I think they're targeting a different segment. Conversation for another day. I
Okay.
think the most viable competitor is Solana. They have the transaction speed. They have, I think it's like near zero gas fees, or especially comparatively, but on the blockchain, I think they're near zero. They can already have NFTs. There are NFTs that exist on the Solana blockchain. People can buy and sell them on the Solana blockchain, and you can buy and sell them on decentralized apps built on the Solana blockchain without any of the issues you have from Ethereum.
Okay, so there is one final one, and then we can get like the true list together. The final one is Algorand, and I completely
Mhm.
blanked that until I thought back to our Tuesday video.
Okay.
So
Big topic of conversation there. If anyone listening or watching missed that, check it out. A lot of talk about Algorand, and it is a great project.
yep, for sure. So again, you've got Cardano, you've got Terra Luna, you've got Solana, you have arguably Tezos, you have Algorand, and then you have um, I think I already said Cardano, did I? Who was the other one?
Uh, you're thinking of the last one, which would be Algorand.
Okay, Algorand. We'll go with that. So when you think of these platforms, again, think of the three tiers. You have speed, you have scalability, and you have security. Do any of them hit it better than Ethereum does?
Solana in all
And
three, except security, because
except for security.
but in here, I work in data analytics and tech, so I can actually speak to this.
Look at me, I'm Chris, and I've got data. Okay,
I
go,
can
Chris.
actually speak to this. I know what I'm talking
Chris,
about.
speak to it.
Although security, cybersecurity on Solana obviously had an issue earlier in 2021, still isn't perfect. Scaling cybersecurity, I don't think is as big of an issue. I think it's very doable if you just put your resources towards developing it, right? I I'm doing it now at my job. Is a big part of what I'm doing is building out a server and making sure that you can only access it, and you can only access it in certain ways depending on the security clearance you have essentially. I don't think security is too big of an issue, and I think it's something that, compared to speed and compared to uh, what's it called, speed and transaction fees. I'm blanking. Compared to that, I think those are much harder to fix because, and this all depends on how it's built, at that base layer, is that could be a fundamental issue, right? Security, it's easy to go back and add layers and layers later on. But if there's a fundamental component of your program that makes transactions slower or makes it so it costs a lot to get them to work, that is a huge ask to fix. Because not only do you have to fix it on the platform itself, right? Not only would you have to fix underlying Ethereum code if that is where it is, you would then have to go in and update every single application built on top of Ethereum to match that. And that is a huge ask. Whereas cybersecurity, if you add another layer, all you do then is you go to all those apps and you say, hey, here's the extra layer. Here's how you get it in compliance. It's much, much easier.
So again, I want to make sure that we're keeping our audience in mind. We don't mean to get too technical here. So I'm actually going to change gears on this a little bit. Let's go ahead and assume, fairly so, that all of these specific blockchains that we've identified as viable competitors all will either have like a different varying level of speed, security, and scalability. One of those three will always be lesser so than the other two, regardless of which blockchain we're talking about. However, I think there's two things that we are not counting in here in terms of like what would truly make it a viable competitor. Those are network effect via the size of the actual community backing it and actual marketing. To me, as of right now, because they have so much funding, I immediately think of Solana, Avalanche, and Cardano. Algorand is a phenomenal project. They have an amazing, amazing scientific and mathematical base that makes that project really stand out. But they do not have the type of financial backing that it takes, nor community size, to actually compete on Ethereum's level. My personal opinion, and again, I'm not trying to make this about some like biased perspective because you all know by now I am a Cardano fanboy. I think that we're going to see Avalanche and even Luna start to get onto this same tier. But I think that right now you still have Ethereum at like the S tier, if you will. Then you have Solana at the A tier, and you have Cardano, Avalanche, and Terra Luna sitting in the B. So would you agree with that right now based on where all these projects are at in their development? Because again, all of them are in beta with the exception of Cardano and Ethereum.
Yeah, I would agree because in terms of competition between these platforms, protocols, programs, whatever you want to call them, I'd say Solana probably is poised to be that best competitor, but it's still like we were talking about security, right? Until it fixes that, there will be enough concern that will slow its growth or in terms of taking away a sizable chunk of the market from Ethereum. And I think Cardano is another one that's on the right track, right? But it gets a lot of flack whenever something happens. And Steve, you and I have talked about this. I think it's missing some very big plays still, right? It needs that, it needs that marquee fight. It needs a title fighter on its roster. It needs that, blockbuster movie. It needs something that is like, holy crap, okay, you can really only do this on Cardano. It's missing that right now. But I think once it gets that, it jumps up and it joins Solana as a legitimate competitor.
Yeah, and I would happen to agree. I think that that is the big missing piece right now, but I would argue that it's probably the missing piece for a lot of them. Um, what I think sets Solana and Cardano apart in particular is the network effect. And granted, like I'm not going to pull punches here. You cannot beat Cardano's network effect. Their community is unparalleled. But I think that you're right. Like there needs to be more development. There needs to be an additional, big play on it. But I think that if we're talking about the real timeline of what it's going to take to compete with Ethereum and theoretically flip Ethereum, because that's really what we're getting down to here is like really flipping it in terms of actual usability. I would have to say that like the roadmap ahead for Cardano, Avalanche, Luna, Solana, and I already said it, Terra Luna. Those projects have a significant roadmap in front of them that actually will allow them to outpace Ethereum. Ethereum's current scope, in my opinion, is far too limited. Like they are going to paint themselves into a corner. So you and I both, I think, come to the same conclusion, and that is that over time, unless Ethereum starts to really get its act together and the developer base starts to become more progressive, we're not going to see Ethereum stay king because everybody else is going to outpace them. They're going to be what Netscape was when Windows came around. They're going to be what Apple was when they came around and Windows decided to, do a bunch of crap in the early 2000s. That is what we're talking about here. They're going to usurp. So for right now, is Ethereum differentiated enough to survive? For right now, sure, let's call it the next 4 years.
No. Well, okay.
Again, that's a short-term window, 4
Yeah.
years.
Well, hang on. Survive, yes, it will absolutely survive the next 4 years. But just like, you know, being stuck in life in prison is surviving, it's very, very different from actually living, right? I think Ethereum will survive, but it will be at the end of its rope unless some unforeseeable change occurs right now. Because the way I look at it is Ethereum is taking too long for the size of its. This is essentially like if Apple were to lose a war, some product war. I honestly, there's like no good analogy. It'd be like if there was a small computer startup, right? Let's call it $100 million, $500 million company. It'd be like if Apple lost some production war against that company.
Yeah.
That is the difference in size of Ethereum's developer community. Like that community alone is bigger than the rest of the coins we just mentioned combined. But
So
for whatever reason, they're moving slower than Solana Cardano in particular.
yeah, and we're on the same page. So to wrap this whole thing up, I think that there is a really, really sound conclusion. Ethereum is going to remain in this conversation, I would say, for the next 10 years, guaranteed. They're going to stay in the conversation. But that being said, as time goes on, this discussion that you've listened to today, like, is verifiable proof that there is not going to be just one blockchain ecosystem. Take that as the big takeaway here. There are going to be multiple chains at play here, and so long as they interoperate, that's going to give them longevity. The community will again be a huge factor, but when I think about where Ethereum's at right now and where it's headed, yes, it is not a shitcoin right now. But if it doesn't start getting its act together soon, it could very well become one. So that's going to be the end of Two Bulls, One Coin for this week. Chris, we've got one final segment. And again, we love to bring this home. It's been a little bit longer of a show today. We may go a little bit long in general, but we're going to move into our final segment of the day. To nobody's surprise, it's the Aftershock.
The Aftershock.
This week's Aftershock is all about what we talked about at the top of the show, the entrance of the crypto czar. If you didn't catch it earlier this week, President Biden had made the official announcement that they have internal plans to appoint a senior crypto advisor that will basically be a crypto czar. That role will essentially serve as like a liaison or a bridge between all of these different organizations that you hear about. The SEC, you have the goodness, what's the one that operates over
FTC,
the CFTC, right?
which is that.
It's
How,
over.
how, how is that different from the FTC? I guess a better question.
I couldn't tell you, but the problem is that
Okay.
let's just get back to the root of this thing because I'm trying to get this thing as close to an hour as we freaking can this week. The problem is that you have 5 or 6 different agencies within the U.S. government that are trying to lay claim to regulating crypto. That's hugely problematic for a number of reasons, namely because crypto companies, a la Coinbase, if you're a registered one, or even these decentralized organizations that are operating within the United States, they need clarity to operate. The problem is right now, if you go to the SEC, who currently lays claim to regulating crypto, they will give you no clarity whatsoever. That's been made apparent not just by the XRP case that is currently still under trial, but also in the fact that Coinbase, when they were dealing with the Coinbase Lend issue that we spoke about a couple weeks back, literally had to shut down their Lend program they had been building up with the SEC's approval for a number of months. They had to axe it after the SEC came out and said, "Oh, by the way, no, you can't do that." with no clarification whatsoever. So we need proper regulation in this country. We need proper regulation for crypto around the world. That being said, this is going to take two different sides. There are pros and cons. So let's unpack it a little bit. Chris, walk me through the favorables here.
Well, honestly, first and foremost, you can see it right on the screen, but for anyone who's just listening, this position brings together every agency that has a reasonable claim, to touch on how you were phrasing it, Steve, right? This brings together every agency that has a reasonable claim to enact policy and guide regulations over the crypto industry, which is a very good thing. There are cons to that, but we'll get into that in a second. The good thing about this, right, is that rather than 5, 10, however many different agencies having their own policy that could all be just different enough that it basically becomes impossible to do anything, this essentially will make every agency have a policy in line with one another that will then make this not just more feasible, but also actually like legally possible, I guess, right?
Yeah. And
But
again, way to land the dismount there on that word, by the way.
thank
Um,
you.
so I just wanted to give a little bit of clarification. So the agencies that do have a claim to it right now, definitely include the SEC. You have the CFTC, which is over commodities. That's the word I couldn't pull out of the back of my head.
uh
You have the IRS who has a play, but you also have different exchanges in particular, like the CBOE and the CME, that do have some degree of like higher interest in being involved. So yes, bringing all those agencies finally to the table to collaborate on this actual regulation is super important. And the role itself could be a catalyst. Like I agree. Like I think those are the big things. However, on the flip side of this, there are a few things that really bug me, and I want to know if there are any additional ones that bug you. The big one that bugs me is the fact that this position is appointed. Okay. That means that whoever ends up filling this role will not have to be confirmed by Congress, will not end up being somebody that is chosen by their peers. This is going to be chosen by an old white guy in an office. That absolutely infuriates me at my core because I don't believe in that. Crypto is about like freedom and it's about empowering people. If we're going to go that route, we're going to run into a lot of really big issues. Like the biggest of which happens to be private interest. Okay? It's no secret in this government that private interests have sway in politics. That's why they have lobbies. So, in particular, I fear that we could end up seeing Joe Biden to like select somebody out of a big bank or out of Wall Street. And then all of a sudden, we have a massive amount of influence from the existing traditional finance sector starting to work against crypto. Again, if you bring all these people to the table to regulate crypto and we have somebody in the head seat, it's basically saying we need to do X, Y, and Z to defend our existing banking system and our existing stock trading system and the bonds and the ETFs and all that stuff. It's going to convolute and corrupt regulation in our country. So that's the side that I see against it. Do you see any others?
that was the biggest one I was thinking of, right? Like, it is definitely good to have a centralized person who can basically guide all these different interests, right? Because the CFTC, the SEC, the IRS, they all have different angles that they are going to go at crypto because they function inherently differently from another, right? At the end of the day, the IRS probably could not care less whether you call any crypto security or not. What they care about is, okay, how can we tax this and make the government more money? The SEC cares a lot if you call something a security, because if it's not, they don't really have any jurisdiction over it. And what the czar does is it brings all of them together and says, okay, here's how we're going to do this. You guys are then going to base your policies off of how we decide things here. The issue then, and like Steve brought up, is if this is someone who decides, all right, we're going to screw over crypto and all these retail investors, then it makes it very easy to pass, not even pass, just enact sweeping policy that can kill, or not kill, but functionally kill crypto. And I think that is my biggest hesitancy to this. And, to kind of wrap things up here, someone that, the kind of person I would want to see in this role, I don't want a full on crypto maxi bull, tinfoil hat wearing, crypto is king person. You don't want that. You guys listening do not want that, because, like you see in any subject, no matter what it is, having someone that polarized, right, whether it's for or against what you believe, is never good, because all that does is it takes the other side and it further aggravates them, because all they're getting is completely different regulation. And in the same vein, you don't want someone who's full on traditional, finance, right? What you would want is someone like we brought up at the beginning of the show. I'm not saying I want him, but someone like Lee Fink, who says, I like it, there's a place for it, but I don't know enough about it, and so I'm not going to give you some solid prediction. That is the kind of person, someone who's cautiously optimistic, a little skeptical, but also sees its value and isn't going to kill it just because it's going to change the status quo.
And see, let me expand, because while I agree with you that if it's going to be a person that's going to be leading this initiative, it should be somebody that is, I would say, more technologically minded than financially minded. Like, they need to be considering the fact that, like, the decisions that are made here are going to either stifle or empower the remaining, blockchain development companies here in our country that are players in crypto. I would say, like, a Michael Saylor is a really good example of somebody that should be in this conversation. You have even somebody, and this is a complicated one, but like somebody like Cynthia Loomis, who is a massive crypto advocate, but has to keep in mind the traditional system. I don't think Mark Zuckerberg is the right person. I do not think that Elon Musk is the right person. I will even go so far to say that Charles Hoskinson is not the right person.
I more so agree with that, and I have a lot of reasons, but I'm not going to get into them right now.
My further proposal is this: the only right solution is to not do it this way. My personal opinion is that if we want to get this right, and we do not want to have a whole bunch of tech companies and emerging tech providers that are working in the blockchain world leave this country and go to other places that are crypto friendly, the solution is putting together a commission. Like, you cannot just have one person lead this. This is too big of a deal. It is too big of like a situation that needs multiple voices at the table that are not just the head of the SEC. Like, I'm sorry, I don't want Gary Gensler making this decision.
Oh,
I
God.
All due respect to the people over at the CFTC or the CTFC, whichever way you want to pronounce it, or the FCTC, I don't give a shit. Whatever that agency is, all due respect to them, they are crypto friendly. I still don't want you making the decision. This needs to be decided by a group of experts who are taking into account all sides. It's the only way that we end up better. It's the only way that we end up getting regulated the right way. So that's my take. I'm going to end it on that one because, again, we've gone a little bit over this week. I would like to really take a second to thank you, our audience, for sticking around through this show. It was a lot of fun getting through some of these topics. But again, we are here every single Monday and Thursday with new interviews. Richard hosts. And then we also have our live shows at 7 p.m. Eastern every Tuesday and Friday. You can find me and Richard on the Tuesday show and me and Chris on the Friday show. But before we tie up, are there any other announcements that you'd like to remind our listeners?
Yeah. So next Monday, that'll be October. Let me do some quick math. I believe October 18th, 17th, 17th, October 17th.
Oh,
October 17th, Monday, Jared Moore with Sif Chain is joining Richard on the Cryptocurrent podcast.
it's going to be a really good one.
And Thursday, we have Richard Fedico with Altfins, who will be also joining Richard on the podcast. You can listen to those on all streaming platforms, Apple Music, Spotify. But if you'd rather watch that full length video and the interview, those go up on our YouTube channel the morning at the exact same time that the podcast does. So check those out. They're going to be great. And last but not least, if you haven't already, you need to check out this new series on our YouTube channel. It's Crypto Basics with Chris K. That's right. I have a YouTube series on our channel now. You got to check it out. I'm covering a lot of great basic topics to help you understand what makes some cryptos important. But I'm also covering the coins themselves. And starting Saturday and for I think the next 10 days after that, we'll be releasing a video every day covering the 11 essentially most basic questions about cryptocurrency as a whole. And this might as well be a masterclass because you have top leaders and top figures in the crypto space answering some of these questions. And I'm going to break down all of their answers exclusively on our YouTube channel.
It's exciting stuff. The last couple things I have for you this week, folks, before we go, is a couple of big events going on in and out of the crypto space. In the crypto space this week, there's not a lot to report on events, but I am happy to report that it is our CEO, Richard Carthon's birthday this week. So we're wishing a happy birthday to Richard. Do us a favor, hit him up on Twitter, leave us a comment here saying happy birthday, Richard. But also this weekend, we are going to be in Las Vegas for his bachelor party. So I will be out there. Don't expect me to be even remotely responsive. However, if you need to get at me, feel free to contact me via Twitter at @SteveMiller_PHX. You can get Chris anytime at It's Mikas. You've got our social handles up top. It's been a great show. Do us a favor. Make sure you're subscribed. See us next week. We love you. Stay cryptocurrent.